Good morning, everybody. How's everyone doing? All right, Miles. I guess you can hear me okay. Just checking in, making sure the connection's good. On the pound Aussie, we have nothing yet. Still waiting for our first trade. You can see here all the gray bars. So currently flat. Crude oil starting right at 9 o'clock. You got this setup right here. Triggering in, getting in sync with this earlier setup here that was 8 minutes in front of our start time. But right here at 9, you could see it hitting the entry, pushing on through all the way up through 3 targets. Good for 21 cents, 31 cents, 45 cents. Highly profitable trade before stopping out. Up here, you've got to make your little stop and reverse adjustment, which keeps the stop live. So it doesn't really get short here because that short was at 42. Adjusting it down 2 ticks to 40, -1 for the key level, puts that entry at 39, just like we talked about in the last session. The stop still remains at 39 and then trails on up 2 ticks below the balance line, which was at 59. So it got as high as 57, at least the trailer did, but the price had already gone through target 3. So one and done on crude oil. And of course, we got the crude oil inventory report coming up. Quick look at unleaded gas. Not quite as cooperative. Unfortunately, a losing session this morning on unleaded gas with a short trade and then a stop and reverse to long and then a stop and reverse to short again. And you could see that even the stop and reversals, if you didn't stop and reverse, they still would have been losing trades. Just bad. Anytime you get this kind of pattern, of course, with this up, down, and no follow through, breaking through support and resistance, and then trading right back in the middle, it's never going to end well. And that's just the pattern that unleaded gas finds itself in this morning. So sometimes there's a losing session, and that's what it looks like. Unleaded gas, a stinker this morning. So again, good morning, everybody. Ivan, John, Brett, Michael, Keith, Miles, welcome, welcome. Quick reminder, please push the like button. Much appreciated. Let's see, the Dowie Mini. All right, so the Dowie Mini, getting into this blue trade here. This is the trade off of the 20 SMA. It's part of the diamond level setups. Those of you using this setup long at 466. Trying to get to that first target of 493, which is 27 points, $135 per contract if it could reach it. And it looks like it is just about there. And it did just hit the target. So if anyone's in that trade, move your stop to break even. Trying to get to 93. Actually, it got to 92. There it is. Now it hit 94. So you can see the stop moving. And this is one and done as well, the Dowie Mini. Good morning to you, Tony, Armando, Vicky. Welcome, welcome. Let's look at the counterpunch on soybeans, 8:30. So getting long soybeans on counterpunch, long from 14.29 and 3/4. Hybrid mode means when the trend mode indicator is blue, we do not stop and reverse. And you can see that the short setup in gray got filtered out. That's why it's in gray. Hybrid mode keeps you in the long trade. So the soybeans trade is still going. Don't know if it'll win or lose. It's kind of sideways and choppy here, low range. You can see in the high trend indicator down below. Even on the slower trend, it's pretty tight. But it could break out. That one targeting 1432 is its first target, and the stop is at 1426. Remember that trades in quarter point increments, much the same as the ES. $50 a point, $12.50 a tick. YM pushing upwards. This is the beauty of the blue, the dark blue trade off that 20 SMA. Almost getting to target 3. But what it does is it finds support on a pullback oftentimes. So you have your move up and then a pullback, which isn't really much of a pullback, but the exhaustion dots do get, one of them at least, within the proximity needed of that blue line in order to give that second trade. Not second trade, but second leg up, which is where the trade lines up with. And that is really the intent of this setup. It worked perfectly this morning for the YM. And soybeans, look at soybeans making its push and getting to target 1. So soybeans doing its job, the hybrid mode doing its job, preventing it from stopping to short, keeping it long, and then it makes its push up and hitting its first target objective for 9 ticks, which is $112.50, 9 ticks. So just looking at the euro yen, so starting at 830, it never comes down and touches the entry, so it's flat at this point. And we'll see if we get a setup on there on that one. Same with the pound Aussie, nothing to report at this time. Vicky, this is just our old friend from the past, soybeans with Counterpunch Trader. It's a 5-tick momentum bar. Starts at 8:30. It's on the Counterpunch website. It's an old plan. It's something that has been going for a long time, and I just thought that we'd start looking at it again because I'm looking to just diversify a little bit. There's a lot of new Counterpunch traders that have come on board with Counterpunch Express 2 anyways. I am putting on a show this morning, pushing through target 4, continuing to trail upwards. That trailer now is at 523, up 250 points so far in the day. That's a good sign after some selling this last week. Is there an alternate version of the hybrid bar on SMS? Brett, not really. I mean, you have to understand that Spotlight and Counterpunch are not the same. They work totally different. So it wouldn't really apply. With Counterpunch, the setups come based on one set of exhaustion dots to its relationship to either one or two sets prior. That's all it is. Spotlight does not work like that at all. So it just wouldn't really make sense. I haven't looked at Spotlight in soybeans. I guess it wouldn't hurt to look at it. We certainly could. Could be an interesting thing to check out. So anyway, the soybeans trade hit its target 1, came down, stopped out at break even, and that's all she wrote on this one. So one and done. And that's the point of this plan, is an extra trade that wins a lot, and oftentimes with one trade. So it could just be a one and done, whether you win or lose. You could test it and see if additional trades are beneficial. If the first trade loses, that's another way to do it. If we were to look at it on Spotlight, I'll just copy this YM chart here, and we'll change the symbol and take off the key level adjustments, and we could take a look at it and see how it looks. Today is, I think we're in the May contract, right? So it would be SK21, 1.25. Should do it. And then let's just turn off what we don't need here. There is some minimal targeting that probably needs to be set, but so on Spotlight, you got a long here, and it actually is the same trade, but that's just a coincidence. But you'll see it stops and reverses here. So yeah, I mean, you could put on the trend mode indicator, I guess, Brett. But it's just a coincidence. The reason why you have a long trade here is because of the Spotlight diamond level setup, where the proximity of the dots are actually on the 200 moving average. So if you just put on regular Spotlight, you probably wouldn't have had a trade here at all. You would have had the short trade, and that would have been a 5-tick winner, which is the minimum. Yeah, it very well could work on Spotlight also, just coincidentally. If you want to use the hybrid idea to prevent stop and reversals, the whole concept of it is the trend mode indicator here. When it's up, you don't stop and reverse to short, or if it's down, you don't stop and reverse to long, which doesn't always help. I mean, there are going to be times when you wish you did, but by and large, it's pretty good. With, you know, in certain things, certain charts, it's going to respond well. So like here, there's a long trade. The line is red, but it wasn't in a short trade. So there's no stop and reversal to consider. So you would just get long anyway. But if you were short, you wouldn't get long until after it turned blue. And then if it pops down and touches the stop and reverse after it turns blue, that's where you would get long. That's the concept of this indicator. So this indicator comes with Counterpunch Trader, Counterpunch Express 2. So after a rocky start, took the fourth attempt to get into a trade here on unleaded gas, which is what got it to only a target 1 before stopping out at money management. So ultimately, you don't probably want to be taking this many trades in a session. You kind of want to admit it's a bad session, keep the losses small, and just come back tomorrow. Or if you're doing a mini session, you could always have a later start time for a second session, but that's something you've got to test on your own and make sure it's viable. Like with crude oil, and it probably would be with unleaded, but I just don't have any information on it. It's not something I've done personally. Good morning, F. Creekmore. Welcome. So feel free to ask any questions. We've got quite a few people joining us again this morning, so let me just remind you, I'll have to put my YouTuber hat on. Please hit the like button. Don't forget to subscribe to the channel. Click on the little bell so that you can get notified when there's a live stream, which we're doing all the time now. There will be some impromptu live streams coming up. You'll want to be notified on that. Tony asking about the original Counterpunch Trader versus the Express version. So if you have the original, you certainly don't need the Express version. Heads up, there's a long on the pound Aussie at 1.8023. You can see all the targets there on the right. Give me a moment so I can place this trade. righty. So the pound Aussie, the stop should be at 1.7999, not 8001. Make the key level adjustment to get below the key level of 8,000. Targeting 8039, 48, 57, and 66. And let's see if we can get another winner this morning. This is going to be a short session, as you know. I will be cutting this short in front of our crude oil report, and then you guys will just need to log back in again as I reset everything. So probably in the next 20 minutes or so, we'll end this session, and then you can come right back in moments after that for our crude oil report trade. Mike, yes, how do you place your trades? You use the matrix and TS. Yeah, I do. I do use the matrix, and I have it set up to get in at stop limit orders to reduce my slippage. But with the pound Aussie, I use FX Synergy and the rapid fire entry tool. Right on this YouTube channel, there's a good video on how I place trades, by the way, Mike. I probably can't find it for you at the moment while I'm streaming here, but if you look through the list of videos, there is a video that shows you exactly how I use my matrix. I usually have 3 matrices. One of them, they're staggered, so I can easily click from one to the other. And one of them is for entering stop limit orders. Another one is for entering stop market orders, and that's one I use for stop and reversals. And then another one is just for single market orders. Oh, great. Thank you. Thank you for finding that video, Mike. There it is. That was either Kevin or John. I can't tell. It says Backpack Trader, but one of the two. Dawn, I'm looking over, and I'm not quite live yet. I have my order placed. So this is how another little trick I do is that when I look at a trade like this, and I see that it already triggered in and came off, like this one, I'm going to adjust my entry a little bit above that bar on that just spiked in. Like I'm not going to get in right here at 23. I'm going to see that it could push through up here past 25. I added some spread. So I know that there's this on the left also. Got some resistance over here, but I'm not adjusting all the way up to there. It's too much. I mean, I guess, I don't know. It's debatable. It's like right on the fence if the adjustment around this level here is appropriate or not. I mean, you could make the argument to do it. The high is at 27.5. So if you put your entry at 28 and added spread to that, you're getting in at 29. And the entry's at 23. I mean, to me, that's just too big of an adjustment. I don't make adjustments that are that large. I did push it past the spike on this bar here because it had already triggered in and came off, and then I went to place my order, so I adjusted my entry around it because the price action's telling you stuff, and it's telling me that it wasn't able to get through and continue, so why do I want to get long here if I can get long right up here? Does that make sense? So I'm still flat, but my order is pending. So when I use the rapid entry tool, I went ahead and adjusted the entry. Thanks, John. Yeah, John is in as John, so thanks, Kevin, also. William, what was the name of the individual who turned a small account into a large one trading micro Forex? I don't remember, William. I don't remember. I know what you're referring to. Are you referring to the book Millionaire Traders? The gentleman from South Africa? I think if I remember correctly, yes. Okay, so there's a book called Millionaire Traders by Boris Schlossberg and Kathleen Kathy Lean or something like that. I'd have to look and see. I remember Boris Schlossberg is one of the authors, and it's interviews with a bunch of traders that later went on to become millionaires. And this trader, his lifelong dream was to be a Forex trader. He's from South Africa, and he lived, very modest means, corrugated tin hut, dirt floor, very, very poor. Saved up a couple $100 and quickly lost $20, which to him was devastating, 10% of his bankroll. But that was a slap to his face. He didn't give up, realized he had to learn things, settled in on a trade plan and a strategy that he got really good at, started trading it over and over and over, using money management, building his position, and becoming a millionaire. So that's one of the interviews in the book. So definitely a source of inspiration, Millionaire Traders. Yeah, William, it took me a second to figure out what you were asking, but yeah, that's the one. So this is a real test area for the pound Aussie because you see the 50 pushing up to the 200, and this area in here, you can see it finding some support in here, but it's got resistance up in here. And will it break out or not? Will it rally or not? It could fail and head lower. Anything could happen at this point. Definitely in no man's land. That's why when a bar pushes through like this and stabs through the entry, I'm going to make my adjustment around that bar. I do that every time. I do it in crude oil all the time. I don't care what the chart is. I want to see it push through. Since I didn't grab it immediately when the setup happened, after the next bar, I got new information. So I'm going to make a little adjustment to my order. I mean, it could still trigger in and then go down and lose anyway, and then I lose more. Or it could lose and then I don't get in, I stay flat. Or it can trigger in and go up and then I don't make as much because I'm getting in at a higher price. I mean, anything could happen. But that's a chart level adjustment or key level adjustment, however you want to say it. It's an insurance premium that you pay that keeps me flat. So be it. Whatever happens after that, so be it. Tony, yeah, no, we don't do the 10 a.m. mini session on Wednesday. And the reason, I mean, it could work. Sometimes it will work. But we do wait for the inventory report because what you don't want to do is be sitting in a position in front of the report. And that could happen. Like, what do you do if you take the 10 a.m. session, trade, it sets up, maybe it sets up at 10 minutes after the hour or whatever, and it doesn't move and it's just sitting there. And then now you're facing the crude oil report. What do you do? Like, you don't want to find yourself in a position where you lose control of your trade. And that's the problem, holding a position or trying to trade into the report. That's why we wait our 2 minutes. We used to wait 5 minutes. Some people still do. There's a trade plan that a gentleman who's a long-term member of Counterpunch, John Huckle, we haven't seen him in a while, but he trades a 610 tick. He waits 5 minutes. It's his own plan that he created. It works really well. Yeah, so if the report's on Thursday, then yes, you would do the 10 a.m. You could probably do it on Thursday also, actually. It's hard to test that because there just aren't very many examples. So not really much to do unless you guys have any specific questions. I'll just mute the mic for a little bit, and if you have any questions, I'll jump back on. We're probably going to keep this going for a bit longer, and then we'll be back in here again, like I said, probably around 10:20 or 10:25 at the latest. We'll have the second session starting probably about 5 minutes in front of the report. Hey, Giancarlo. Let's see. Asking last week, we were looking at a short setup and the following bars starting to go up, and you mentioned that we needed 2 green bars above the signal line to cancel that short setup. Can you please elaborate more about that? Yeah, so the way both Counterpunch and Spotlight work the same, when you have a setup, it's either going to trigger in or it's not, right? So when does it cancel? So I'll find you an example. Okay, so, well, imagine this one. This would be a stop and reverse, but it doesn't matter. It's the same principle. It's short here. You have a long setup. Of course, you're going to adjust this up a little per the stop and reverse adjustment techniques that we use, but you end up with 2 bars that close below the balance line. And you know it's below because remember when you're short, the bars are red and the light, bright color goes in the direction of the trade and the dark color goes in the opposite direction. So this is a long trade. And so if you get two bars that close below the balance line before it triggers in, the trade cancels. So here you go. You got this trade, this bar here closes below, but notice that there's still an entry sign. Remember, the entry comes when the bar closes. So the strategy knows that that's still a valid setup at that point. After the bar closes, it's still valid. The entry prints, right? But then the second bar closes below the balance line like this, and the entry stops printing because the long trade has canceled. So it's just part of the mitigation process. Now you have inputs. This is called the cancel bars, and the default setting is 2. So if you were to look in the calculator right here, this is an important input, cancel bars. See, it's set to 2. If it was set to 1, then the second entry that you see on that first green arrow would not have printed. Like if I change it to 1, once that bar closes below the balance line, it cancels the setup. See? Now notice that the plus sign went away. That's with a 1 bar cancellation, but the default setting is a 2 bar cancellation. Well, what if I set it to 3? If I set it to 3, try that again. I did the wrong one. If I set cancel bars to 3, stop should be 2, I believe. All right. Now look. Now it doesn't cancel on the second one. It cancels on the third close below the bar. See? So now the entry gives you 1 extra bar. So, I mean, you could set it to 10. You could set it to whatever. This is something that I typically test when I'm automating a custom plan. Same thing with the max bars for setup. The max bars for setup is also important because that tells you how many bars to the right of that third exhaustion dot can you have a setup bar. So it counts the third dot as 1, and then this is 5. So that means 1 either on the third dot or up to 4 bars to the right of the third dot, you can get a setup bar. Since the third dot counts as the first bar. So those two are important inputs, and it can change a lot your results. Now, there are, of course, rules that kind of change if you're in a stop and reversal. So if you're in a stop and reversal and the trade already triggered in, or if you're getting in sync with the trade that had already triggered in, let's say you're getting in sync with the trade, like for example, this pound Aussie. Like I'm going to try to get in sync with this if it comes back up, right? Because I put my entry up here. But it already triggered in per the strategy. We have 1 bar that closed below the balance line already, and if this second bar closes below the balance line, this trade is not canceled because it already triggered in. So I'm going to try to get in sync with it. Even if it closes again below the balance line, it could still come up. And if it does, it would trigger me in. I'm not going to cancel this trade unless it hits the stop. If it stops out down here at 999, then I would cancel the trade. So there's a difference between if a trade is actually in, if it triggered in theoretically due to the signals that print on the chart versus the other example I showed you that it never did hit the entry. Then the 2 bars on the other side of the balance line will cancel it. And if it closes beyond the stop, then that too will cancel the setup. either on the stop or beyond. So if you go back to that example I showed you or some other example, sometimes it depends on the chart. It often won't happen with a momentum bar. Well, it could, but the cancel rules are there for a reason, because otherwise you just have a trade that, I mean, how do you cancel a trade? You can't have a setup that's just there for infinity. And it works the same with counterpunch. So just looking at this rather messy looking chart on soybeans, which did get to its first target and is one and done, by the way. And that's why you use power of quitting, because you certainly don't want to keep trading into this mess. But you do have a long setup here. And notice at hybrid mode, here's hybrid mode. It's very interesting, because it gets short here, and it actually got short as it pulled back and hit the short entry. And then you have a long setup here, and the long setup is grayed out because you cannot stop and reverse because the trend mode indicator is red. And then you get another setup based on a new set of exhaustion dots. And that too is red. To the left is where the bar closes. It turns blue on the next bar, and now it allows you to stop and reverse for trend mode. So basically this has stayed short the whole time here, prevented you from getting long because it's the trend mode indicator is red. Now the trend mode indicator is blue, but it's a new setup. And so the new setup canceled the old setup. The strategy is smart enough to know that. But the trend mode is still red. And by the time it becomes blue, the bar had already closed down to here. Remember, it happens after the bar closes. So the trade's still short. And you can see the mitigation process of the filter working in addition to the rules of the strategy. One setup being replaced by a newer setup. You have one bar closing below the balance line, and if this green bar forming here closes below the balance line, theoretically that would cancel the long trade. But you'll notice that the long trade's already canceled. Why is that? Well, it didn't cancel. It's just that on the next bar, the trend mode indicator is red again. So the filter prevented the green bar. And now that it's not going to respond to the purple trade because that's an add-on trade. The chart itself is tracking the white trade. It can't track both. And it's not going to show you that this is gray again. Once it's gray and then turns green, and then it won't turn gray again. But if it were to come up again and turn blue, you'd see the entry again. But the thing is that unless we get a close below the balance line here, then that would cancel it also. It's tricky when you start adding filters, but it's important that you understand what cancels a trade. It's hard to think of every single situation, but I think we kind of did. All right, so this is the time when I thank you for joining us this morning. Please hit the like button if you haven't done so already. Come back in about 8 minutes or so. We're going to start back up a new session for the crude oil report. Thank you for your questions, everybody. They're good questions today. And I'll see you in a few minutes. Bye, everyone.